Jessica, good day. A huge slide in the oil price today with motorists hoping it trickles down to a petrol price cut here in South Africa. But why did oil slide today?
Thanks, Devin. Yes, we did see crude drop to about a one-month low today. Brent just clinging to that $70 a barrel level. And remember, just last week, Brent hit 75. So we've seen this quick swoop downward here. And prices have been depressed really on this abundant global supply that we've really been seeing. In the U.S., crude inventories rose by nearly 10 million barrels to the highest level since 2017. We saw that in an inventory report this week. And then at the same time, we have Russia missing its production cuts targets on April, so essentially pumping more crude than the market and analysts even thought that it would be. So essentially what we're seeing right now is, even though we have the expiration of Iranian crude sanction waivers there, we're still seeing plenty of crude to go around, and it's really weighing on prices.
And then Tesla CEO Elon Musk, through most of last year, if you remember, insisted that the company was doing fine and would not need to raise additional cash, but it now plans to raise $2 billion.
Yes, that's exactly right, Devin. Tesla does plan to raise about $2 billion through stock and debt offerings there. The shares rallied about 5% today, but I want to put that into perspective for you because Tesla shares have actually tumbled about 30% this year. And what's quite interesting, like you mentioned, is that Tesla had been pretty insistent that it did not need to raise capital, but then after it reported first quarter earnings, it sort of changed its mind a bit when we saw record decline in vehicle deliveries, and the company's biggest debt payment really depleted its cash balance there. And Bloomberg intelligence analysts are saying that if Tesla is able to raise about $2 billion, it's going to push the company closer to that 15% ratio of cash to sales. And really, historically, that would be in line with other auto manufacturers and suppliers. So we'll see if that happens.
And then, Jessica, finally, as I said before, we always end up talking about food in some way or the other. Dunkin has upped its coffee and breakfast game, and it appears to be paying off.
Yes, it does, especially its new espresso platform, so I've heard. Dunkin Brands did release its first quarter earnings results. It reported better than expected same-store sales, and analysts are saying that its new espresso platform there is really going to help boost comparable sales this year. Its espresso-based beverages actually rose 30% in the quarter and did bring in new diners, which is really quite critical to Dunkin Brands. We're also watching Dunkin's on-the-go ordering platform. Now, that platform expanded and has been quite successful among Dunkin loyalty members, so we'll continue to watch how that platform does as well. Dunkin shares have risen about 5.4% today.
Bloomberg's Jessica Summers in New York. Thanks indeed.